Welcome to Set Digital Roadshow First Quarter 20 and 22 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite H Hotels and Resorts Public Company Limited start the presentation, please. Thank you very much.
Thank you. Thank you for the introduction and a very good morning to everyone. We have a few slides to present for you this morning. I assume that most of you on the call are quite familiar with us and what we've been doing. So we will kind of do a bit of high-level overview, and please, any questions that the audience might have, please reach out to us. So this is the story when we started up in 2014, and then kind of a bit of a refresher, the highlight when we went on public listed in 2019, where we have been listed. So since then, there's quite a bit of activities that has been going on, even during COVID, that we have been working on a few things, as you can see over here. I think probably most noticeable is just a week and a half ago, we concluded the sale of one of the assets in the UK, the Burton one. That was part of our strategy to dispose it off, which I can elaborate a little bit more on it. So that was good news for us on the disposal strategy that we wanted to do and complete it for this year. Otherwise, we can see quite on the numbers of rooms that we have are spread geographically where the businesses are coming from, so there's no change. UK, predominantly on the UK portfolio, and then Thailand, Maldives, Fiji, and Mauritius. So our customers, it's quite global diversified, as you can see here. It's Asia Pac, Europe, and US. They are kind of throughout the whole estate, which gives a nice platform to grow, particularly now post-COVID. If I can go to the next slide, please. So that gives a bit of where we're sitting on the number of countries that we're operating, the brands that we're working at. It's our own brands, and we also have franchise brands, and the geographically spread. Just the marketing itself, where we are positioning, we are in the upper upscale, upper mid-scale. So that's the space we're comfortable in. So we don't have any kind of luxury assets, high-end luxury or budget hotels. So that's the space that we're taking it. The good thing is that it gives us the opportunity to quite yield well for these markets, and particularly in those segments that we're operating. Next slide, please. So our business module, just a bit of a refresher. We have three. So they are the self-managed hotels, as we call them. So that means all platforms is fully managed by us. So human resources, finance, operations, commercial side. So they are our homegrown brand side that sits under that platform, and also Santorini and Samui. We have the third-party HMAs, meaning we've signed up with international operators to either manage them or to manage them on our behalf. So they are the outrigger portfolios in Fiji, the Mauritius one. And the new one that's under construction is the So Maldives, which we recently started with groundbreaking. Then the last platform is the franchise estate. It's a hybrid between the self-managed and franchised with an international brand. So we've done that, and we started up in the Maldives with Hard Rock and with Hilton. So they are the three business modules that we're working at. Obviously, the difference sits on the EBITDA levels. The self-managed, we don't have the high cost and the high fees from the management companies or from the brands. So they are kind of the more lucrative platforms. So with EBITDA margins 35-40. The franchise, which is a platform that we feel quite comfortable with as well to continue to work. So margins about 30-35, and then the HMA platforms, that sits about 20-30. So that's kind of the key variances that we can see throughout the platforms that we have been working with it. So revenue contribution for this year, Bulk is still the third-party HMAs and predominantly driven by the UK, obviously, 59%. Then 28% is predominantly the Maldives. 13% is predominantly the Thai assets under the self-managed platforms. Next slide, please. So a brief overview since it's reopened last year and where we're standing this year. Probably starting on the UK as a refresher, opened up in May 2021. So there we really saw a high ramping up towards the summer months with staycations. Most likely it's going to be the same activity platforms that we will see this summer in 2022 for July and August. Then it slowed down a bit towards the back end of the year. Historically, it's always like that. Running into the first quarter, which is, if you can describe, of kind of low season after Christmas, New Year, and also the Omicron impact that we had felt in the UK, and then ramping up for end of quarter one into quarter two with April and May, quite good performance on occupancy wise. Similar story for Maldives, back end of the year, then first quarter, which is always high season, then April and May, which was predominantly driven by Easter holidays. That was kind of better than expected for April month, that we thought it would have been challenging. So it turned out to be pretty strong for the Maldives. Then in May, June, which historically is kind of low season month, so we know a bit drip in occupancy, but there's no going concern there. This is historically how the markets are moving on. Thailand, slow process ramping up. We know there was a lot of restrictions still in place, opening up, closing, etc. Let's move on to April onwards, where we saw pretty strong performance. That was predominantly driven by Songkran period, domestic holiday making, but at the same time, some slowly ramping up from international tourism that was fueling it into the properties, predominantly in Phuket and in PP. So May was a bit slower off on occupancy. Hence, again, it was to do as well with the end of the We Travel Together campaigning by the government, which is going to be restated from July the 1st onwards. So we can see a bit ramping up again. Fiji is really phenomenal. The business pickup since reopening in November from last year. It was a bit of slow ramping up, but historically December, January, February is pretty low season in Fiji properties, and then April and May, the numbers speak by itself occupancy wise, 60-75%, and moving on from June, July onwards, we gearing up about 90% occupancy for the Fijian properties. So really strong bounce back markets, predominantly driven by the Australian and the New Zealand markets. Mauritius has been a bit of a roller coaster, a bit up and down. Fabulous opening towards the back end of the year after the reopening of the country in November. Then it dipped in towards the back end, predominantly due to the Omicron, originating from South Africa. South African markets pretty much impacting the whole business. So we could clearly see that was kind of a hit on the first quarter, recovery from April with the Eastern holidays out of Europe, and then continue in May. It is still a bit of a roller coaster for Mauritius for quarter two and quarter three. As we can see, a lot has to do with the accessibility and flight limitations into Mauritius. So we see that is still might have a bit of slight impact on the numbers there. However, quarter four, it looks far more better than we can see, and even pre-COVID numbers that is ramping up for Mauritius. So that gives a bit of the portfolio. The next slide gives a bit more flavor and details on what is happening throughout for the remainder of the year. It just highlight a bit what I explained a bit before towards Thailand. We can see most likely back end of quarter three, quarter four, kind of recovery for Thailand, assumably that Thailand pass, etc., will be all taken out. Easy travel to come into Thailand. International markets are picking up. Demand is high for Thailand, no doubt about it, and that's going to be uplifting towards the back end of quarter four. Most likely rate-wise will be similar or plus compared to pre-COVID, which is kind of 2019. So positive news and sounds as well from Thailand towards the back end of the year. Maldives continues to be strong performance. So GOP very spread out, which is great. So we know that we had quite of Russian markets coming into the Maldives back end of the first quarter. Then with the Ukraine conflict happening, we saw a bit of slowdown. Didn't really impact us a lot. Contrary, we see as well now that the Russian market is coming back into the Maldives. So good news on the Maldives that we see moving forward. The international airport is also slated now, particularly the runways, to open towards the back end of this year into 2023. So that's good story and good news coming out from Maldives. Mauritius, as I mentioned, is probably the back end of the year as well. Fiji, strong performance. UK ramping up for summer months with staycations. It looks as strong as last year at the moment, particularly on the pacing. What we're seeing in the books is similar to last year with even higher ADR. So we see kind of 15% uplift on the ADR versus last year. So that's a bit on a high level overview, a bit more color into it. The next slide, please. Yes, so that's on the UK. So we went back into the numbers on RevPAR. So for this year, we already exceeding 2019, which was considered a good year still on the UK. So that was 2020-21 was kind of Brexit and COVID impact anyway. But good news from the UK towards driving performance, predominantly geared by driving the ADR. That comes up of strong recovery of the MICE business on the UK. So businesses and MICE planners are taking up where they left it before COVID in all the properties that we can see. Next slide gives a bit more flavor on the Maldives. Some phenomenal and good numbers. So here again, we're going back to kind of pre-COVID, 2019, tourist arrivals about 1.7 million. That was including still Chinese. At the moment, we have 0 Chinese business in the Maldives, but also Asian markets. So we know that it's still restricted and small portions that's going into the Maldives, particularly Singapore, Hong Kong, Thailand, which is also a market that hasn't been picking up, and also Australia. So slowly it's coming in. So for this year, 1.6 million, that looks pretty strong numbers that we can see for growth for the Maldives. Next slide, please. Yes. So just as a bit of border reopening for us, it's considered as green light throughout all the properties that we're seeing, fueled by strong demand and improvement. So there are quite some good numbers here on tourist arrivals. Fiji up 12.5, Mauritius up, Thailand up. Again, that was predominantly driven by the domestic travel campaign. We travel together and slowly picking up from the international tourist markets. Next slide, please. What we've been doing on and very focusing in is on the digitalization of our platforms. So digitalization towards consumer experiences, but also for intel that we wanted to see where our customers and our guests are coming from and how we can get them more attracted to book directly with us. So pre-COVID, we got about 10% on bookings direct. So where we're sitting and what we see this year is about 30%. So that's quite significant conversion and capture ratios that we're doing it. So that's driven throughout the whole platform, throughout the whole estate. And that's good numbers for the hotels. Next slide, please. So a bit of numbers. Where we're working on it for this year. So our numbers last year, we closed about 4.5 billion on revenues. So this year we're aiming for 8.6 billion. So that's a significant growth in our revenues. Where we're going to see, and it's coming from besides the organic growth, is we do quite a bit of capex planning, and we've started quite a bit already. We're doing work in the UK portfolio. It's kind of reassessing the portfolio, those high performers, those low performers, where we see the uplifts coming in. That's kind of one major milestone that we start doing already in the UK. Maldives, we're working as well on product enhancement, where we can see really uplifts on particularly on rate-wise, building pools to the existing villas, as just to give an example. Fiji, we start the full renovation in the month of August. That's quite a major overhaul. Predominantly that the asset is underperforming in its comp set. By renovating, that's going to give us a significant uplift at the properties itself. So by all these activities that we're putting in place, the capex, we should be able to increase the ADR by 20 to 25% in those properties that we are capexing and investing. So we're comfortable with these numbers, particularly understanding clearly what our customers want, the positioning of the assets itself, and the expected returns. Next slide, please. So business direction. So yeah, that gives a bit of the numbers where we're sitting 22 and then moving up to 23. So we're thinking ahead already where it's going to come from. Our growth is predominantly organic. It's going to be the result of the capex planning starting this year, running into 2023, and obviously creaming in from 2023 onwards and subsequently the following years. So it's kind of an organic stimulated capex growth. In addition to that, we're looking as well for new investments this year, next year. So opportunities that might come up that we see we can go into the markets and do kind of easy conversions with immediate recurring income. So it's really building and continue to building our pipeline. So it's focusing on really on enhancing and the efficiency of the existing portfolio. It's also about balancing our growth with financial strength. So we are not going out and investing that we don't see any returns on assets. So we clearly guided on that one. Obviously maintaining as well our EBIT on the debt and equity that we're putting in place, just that we make sure that we have a healthy financial performance for the portfolio. Next slide, please. So just to come back a bit on our strategy, we call it the asset rotation strategy and a capex strategy, particularly on the existing properties. Just alluded a bit earlier on, we've parked and we earmarked kind of 2.8 billion Thai baht for capex planning and asset rotation in the next 3 years, just to make sure that we can bring up the expected revenues. So next slide, please. So that's a bit on the UK strategy. In my intro, I just mentioned about the disposal of one of the assets on Burton. Last year, we disposed Newbury as part of our planning. So we have earmarked another 3 for this year and running into Q1 or Q2 2023. It's mainly the proceeds is for reinvesting in the properties where we see a strong potential and uplift the performance significantly. So that is the concept of the asset rotation. So that would give us that whole plan of disposing the underperforming hotel assets, and by reinvesting in the top performing ones should give us an uplift, particularly on the renovated one, 15%. Certain one goes up to 20-25% of uplift. Next slide, please. So growth as well, meaning we are looking for properties, brownfield properties as we call them, meaning existing assets that might be underperforming in its market, and through capex planning, repositioning them and uplifting. So what we have been doing so far with PP, what we have been doing in Phuket, what we're doing in the UK as well. So that's kind of the appetite for assets that we're looking for. The areas, the geographical space, we're comfortable with Asia Pacific. We're comfortable with the Indian Ocean as we have presence and know how to operate. We're comfortable with the UK and also the Mediterranean basin. So that's pretty much Portugal, Spain, Italy, the southern rim that we're exploring a few opportunities in our growth. We're investing, we don't do kind of trophy assets. We are not into the real estate play, but we're pretty much into the performance play of acquisitions of existing assets and uplift the performance. So we set ourselves kind of IRR as well, 12 to 14%. That's where we see kind of the ballpark returns that we expect from these properties. At the same time, we've introduced our homegrown brand site. We've having 3 of them in Thailand. We have 1 in the Maldives. So there is more appetite coming up to deploy the brand for more international expansion, predominantly probably in Asia Pacific first, and we take it on for further growth in the future. We're working as well with international brands, what we've done with in the Maldives. So that's also on the asset light platform. We will deploy it out towards the back end of this year and into 2023 after we see that brand recognition is very strong with SAI in those markets that we have been trading and operating. Next slide, please. So just a bit on numbers. Probably this one, most of it I've covered it already into the presentation itself. We can go through the next slide. So that's kind of the performance on quarter. This is the back end of 21 into Q1 2022. Self-managed predominantly is Thailand assets. So we saw occupancy ramping up slowly on that one. Good was on the rate growth that we saw on the markets that's picking it up and towards a RevPAR growth. Outrigger hotels very similar, even though there is seasonality impact back end of the year and in Q1, which is low season, and then Mauritius that sits under that platform. However, good performance on rate-wise and occupancy. Similar for Crossroads, we saw the ADR uplift quite significantly from in the back end of Q4 and into Q1. So that continues to be a strong market, including as well occupancy-wise that we saw of the performance. UK, we see some drop in occupancy, but as mentioned earlier, nothing to worry for us, nothing to worry. Historically, Q1 is always the weakest quarter of the year. Rate-wise as well, it starts slowly ramping up. So, but then these numbers are changing quite dramatically from Q2 and into Q3 for the performance on the UK. Next slide gives us a year-on-year quarter. It's a bit distorted as last year there was still a bunch of the hotels sitting under COVID restrictions. However, we can see since reopening and bouncing back that the numbers are staggering up quite significantly, marking particularly on rate-wise that we have been driving and outperforming both self-managed, the outriggers in the Fiji and the Mauritius properties. Maldives is pretty impressive growth, also kind of almost 80% growth. So, but we need to know that Crossroads was already trading last year in the first quarter. So, and strategy for us is well command rates, and we did it successfully. UK similar, open up first quarter is a bit distorted versus last year. However, on the rate-wise, we can see too that the year-on-year increase is about 43% on quarter-to-quarter. So for the consolidation of the financial numbers, I would like to hand over to our CFO, Samita Kunkate.
Okay.
Kate.
Yes, thank you, Khun. Sawadee. So in the Q1 2022 for this year, we actually closed the revenue at almost 1.7 billion. This is increased more than 200% if you're comparing this to the same period of last year. However, compare it with the fourth quarter, you will see that the revenue slightly dropped by 3%, and this is mainly due to the low season in the UK. If we're looking at in terms of the change quarter by quarter, you will see that the revenue from UK contracted by 25%, or the decrease of about 230 million baht. And however, for the other portfolio performance, other portfolio has improved compared with the previous quarter. Crossroads Maldives revenue growth around 17%, and this is mainly due to a strong travel demand in the Maldives. and the revenue for self-managed hotel also improved around nearly 60 million baht, or in terms of the percentage is an improvement of 47% compared to the previous quarter, as well as the outrigger hotels is achieved a higher revenue of almost 14%, and this is supporting by the recovery of the Maldives tourism. I think that's capture all the increase and the decrease in terms of revenue compared quarter to quarter. For the revenue contribution by geography, you will see that mainly driven by the Maldives and the UK. So those two together representing nearly 80% of the revenue of the total portfolio. In terms of gross profit, the gross profit for first quarter resulted at around 430 million baht. And if we're comparing this to the fourth quarter, the gross profit decreased around 17%, and this resulting from lower revenues and a higher cost of service. Wherever the cost of service comparing to the previous quarter is increased only 2% from the higher cost and energy price, as well as the depreciation. Going to the next slide, and if we're looking at adjusted EBITDA for Q1 this year turned to profits at 260 million from the loss of 43.2 million in the first quarter of last year. And if we're comparing this to the previous quarter, the adjusted EBITDA dropped at 23% from a higher cost of service and the energy cost increase. However, it's the report shows the third consecutive quarter for the positive adjusted EBITDA, and this is reflecting the performance recovery of the company. If we're looking at the bottom line, the company reporting the profits, the loss in the Q1 of nearly 200 million baht, comparing to 31.3 profit in the fourth quarter last year. And because in the last quarter, the company recorded the deferred tax interest of 130 and the fair value adjustment on the JV of nearly 66 million. So that's causing the Q4 resulting in a higher profit comparing to the Q1 of this year. Next slide, please. If we're looking at the financial position of the company as at the 31st of March 2022, we will see that total assets closed at nearly 36 billion baht, decreasing only 2% from the previous year or the year in 2021. And the contribution in terms of capital structure remained unchanged, I would say, with the equity portion of 43% and the liability around 57%. In terms of the liquidity, we have the total cash at 1.8 billion and the availability credit facility nearly 800 million baht. In terms of the major covenants, IBD to equity, we still remain sits at 0.89 times, and this is well below the company our interest bearing debt is in the pound loan as well as the USD and the Thai baht, where there have various percentage in terms of contribution, but all together, and each of them representing nearly 30% of the total debt to interest-bearing debt. And in terms of the maturity, 68% of the interest-bearing debt is in the long-term loan. So as we always communicate to our investor and analysts, so our target for IBD to equity is not more than 1.5 times. Next slide, please. So I hand it back to Kunder for the SD goal.
Okay, thanks, Kate. I know, conscious of the time, so I have exactly 1 minute. So yeah, a lot of efforts have been put in place on the sustainability. So that's the SDG goal. So it's not new to us. It's something that we have been deploying it for the last 3-4 years already. We've just accelerated even during COVID, and they are kind of the main SDG goals that we've been working and we've been setting up. So pretty strong focus into that respect from the company point of view. Next slide, just give us a bit of flavor of being quite how bold we are and more into the activities. We have purposely built discovery centers. We have one in the Maldives, we have one in Pipi. So that gives us a good experience for our guests, for our partners and everybody who would like to know more about the environment. Maldives, we've done quite a successful approach on extending a coral protective area in our laguna, so kind of tenfolded since we started with our project. So we have a team of marine biologists on site, so they have been gearing up to that. At the same time, the sea life conservation area, that's also predominantly in the Maldives. We know how sensitive it is, trading and operating in the Maldives. So we've extended to about 64,000 square meters surrounding Crossroads. Again, that's all our team at site that is managing it and doing pretty extensive conservation projects over there in the Maldives. So I guess that would summarize it a bit on flavor on sustainability. I believe that's the last slide for today's presentation. Yeah.
The section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you, investor and corporate, for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณค่ะ
Okay, Krab. Thanks everyone for dialing in.
ขอบคุณค่ะ